Moody's is saying that they're forecasting 1% growth for South Africa in 2020. How do you feel about this, particularly because you've said we shouldn't give so much weight to what credit ratings agencies say?
So I think let's just step back a bit. Now, our economy has been in a very difficult situation for the past decade. I talk about a lost decade in terms of economic growth and development. So what has happened in our economy is that we haven't recovered from the global financial crisis like most countries. Over the past decade, most developing countries have grown by about 4 to 4.5% on average. But in South Africa, in per capita terms, we have not grown at all. Now, what has happened is that after the global financial crisis between 2010 and 2013, there's a small recovery, and I think we created about 2 million jobs. Now, what happened is that the economy trend growth rate collapsed from 2014 to now, and we've had 5 years of declining GDP per capita. So what that means, on average, South Africans are getting poorer. So now this IMF forecast, they say will grow by 1%. So that means that we'll have another year, the 6th year of declining GDP per capita. In fact, what the IMF has also forecast is that we're going to have 7 and 8 years of declining GDP per capita. They cannot see any economic growth over the next 3 years that is in excess of the population growth rate. So what I can't understand why our government still does not have a plan to get us out of this, what I call the worst post-apartheid economic crisis. Mm-hmm. I've talked to so many people, and I just can't see an explanation as to why. It's almost like they're frozen at the headlights. They just don't know what to do. And we've had the whole issue of load shedding rearing its ugly head again. And we really have to put this Eskom situation behind us before we do anything else. We've had 2 years now of this new board and the new administration, and we don't have a plan to fix Eskom's balance sheet. At some point, we just have to make a decision and get this thing out of the way and move on to the other issues that we have to do in terms of fixing our economy.
So what the IMF has also said is that without structural reform, South Africa is not going to see any significant growth. What kind of reform is that?
Okay, the IMF, let me just say, has got no track record to be able to advise any country, because all the countries in the world, whether you go to the African countries, the structural reforms in the 80s and the 90s, or in Latin America, or even recently in Europe and Greece, everywhere where the IMF has been, it has been a disaster. If you look at Argentina recently, they took a loan of $56 billion with the last president. And where is that president now? The president is now, he's been replaced by a new president because it was a complete disaster. But let me just say, what the IMF talks about structural reforms, they're talking about what they call reforms to the product and labor markets. They say that there must be more competition in the economy, and they say that you must be able to fire and hire people, and they talk about privatization and austerity. But none of those issues, none of those things create growth in the short term. And the IMF itself says that these structural reforms do not create growth in the short term. So some of them make it worse. That's what the IMF itself says. Yeah. Mm-hmm. Yeah.
So Annabel Bishop from Investec is saying that because of the slow pace of implementing any reforms, even though government is trying, there's no point, is my understanding of what she's saying, because of the slow nature of these changes that government is not making.
You know, Zingo, I follow every single policy, I read every single policy document. I don't know what they're doing. I honestly can't tell you. There was a report from Treasury in September. It was an attempt to come up with a solution, but the report itself says it will have no impact on the economy in the first 3 years. All these reforms that we will be implementing, they'll start working from year 4 to 6. Now, what is the point of coming up with a document that doesn't address our immediate crisis as a country? Our immediate crisis is that we need to get our trend growth rate to above 2 to 3% in the short term. Now, what is happening, because our trend growth rate has collapsed to about 1%, anything can happen in any quarter to tip us into a recession. It can be load shedding, as it was last year, the beginning of this year. It can be agriculture. In the last quarter, it was the inventory rundown. So anything random can tip us into recession. And it looks like the bad news we're going to see very soon is that we might have tipped into another recession. Now, it is very not normal for a country to have 2 consecutive recessions in 2 years, unless it's at war. So I can't understand why nobody is approaching this issue with the seriousness and urgency it requires here.
So is there a way of looking at the economic challenges that South Africa is facing without necessarily dealing with it only with economic policy?
And what do you mean?
When people talk about changing South Africa's economy, how do we make sure that there's growth? How do we make sure that we employ more people, we get out of that terrible 29% unemployment rate? What other factors do we need to look at if we're going to grow South Africa as a country and therefore grow our economy?
So you have to look at why is the trend growth rate collapsed to about 1%. And one of the major reasons has been a collapse of public sector investment. Most people erroneously believe that there's a private sector strike, but private sector investment has been growing slowly, and in the first 2 quarters of this year actually grew quite fast. Sorry, the second and third quarter, it grew quite fast in double digits. But what is dragging our economy down is a massive decline over the last 4 years in public sector investment. Let me give you an example. State-owned enterprise investment, 26% decline. General government, I think it's about, I can't remember the exact figure, but it's a huge number that has gone down by. So what we've seen overall is about 18% decline in public investment. Until we get the public sector investing again in the economy, there is no point in having investment conferences where the government is inviting people to invest in the country, but the government itself is not investing in the country. It doesn't add up, you know.
Does it have the capacity to do so?
There's no other way in Singapore, because what are the options right now in terms of getting our economy growing? There are 4 drivers of economic growth in any countries. It's consumption spending, it's investment, it's government spending, and exports. So we should be getting our consumption spending. We need a boost to consumption. We need lower interest rates. Our real prime lending rate right now is 6.5%. It's one of the highest in the world. There is no excuse for the Reserve Bank not to be cutting interest rates. And I would expect over the next year, I think there'll be an interest rate cut very soon. I think we should have more interest rate cuts this year. Yeah.
Duma Gqubule, thanks so much for your time on The Bottom Line and The Full View this evening.